G'day guys, welcome to another episode of Invest with Tim Allen. I am Tim Allen. I'm your fully licensed buyer's agent with IPS Buyer's Agent and your mortgage broker with Moreton Bay Finance Broker.
I'm Ryan from Moreton Bay Finance Broker. I'm a fully licensed mortgage broker, and I am so excited to do this video.
You look it, mate. You look it. He's very excited because this is the last one, but little does he realise that probably in about 2, maybe 3 months' time, I'm going to hit him up to come back on and do a few more with us.
Yeah, can't wait.
So, nice. You love being in front of the camera, don't you?
Yeah, totally. Good head for around.
All right, guys, look, that's enough banter and joking around. If you do like this video, please smash the like button and everything like that. Today, we are talking about loan features. Ryan, tell us about these loan features. What are they?
Well,
what do we got? How do we get them?
to be perfectly honest, there's basically three. There's a package, there's a basic loan, and there's a fixed loan. Within each of those, there's a few different things, but the majority of people who go on a package because they want what's called an offset account. And that will be, in most cases, 100% offset. So the way an offset account works is it's a separate account that is linked to your mortgage. So if you have a loan of $500,000 and have savings of $10,000, the bank works out their interest at the end of every business day, and they tack it on the end of the month. So they will make a calculation on that day that on $490,000, and you'll determine the interest based on that. So the more you have in your offset account, the more money it will save you. So as you build your savings, if we would save it, you have the potential to save quite a bit of interest as time goes on. And it does show in your all statements as well, which is really, really good. A lot of people like the idea of an offset account, and some banks do what we call sub-accounts, where it's terrible, where you can have up to 9, 10. I think some banks can be unlimited, but I don't know why you would need 50 or something like that. But it allows you to compartmentalize your money, so you could have dad's savings, mum's savings, kid number one savings, holiday, new car, that sort of stuff, and they all total together to equal the total. So you had 2,000 in all of them, you had 5 of them, and then have the 10,000, and that's where you're saving money. So when it comes to a package, you're looking at anywhere between $199 and $395 a year. A couple of the bigger banks have clued into the fact that while people want to offset, they don't want any of the other sort of bells and whistles you get with it. They just want the offset. So you can now get an offset with a major for $10 a month. And then when they announced that, another major decided to just beat them by $2 a month, and it's $8 a month for their offset. But personally, I think it's a good thing because $400 is a lot more than $96 or $120 a year for one creature that you want in the West that you don't.
The other thing you've got to factor in too with the package products, if you are looking at, say, that sort of $395, $400 a month, how much are you genuinely going to have in your account under that period of time? So it's around about that sort of $8,000. If you've got about $8,000 sitting in your offset account, you're going to save around about that sort of $400 to $500 in this current interest rate environment. If we get back down to, and I do use if in the strongest sense of the word, we get back down to the sort of, actually I'll get back onto the camera here by moving around a little bit so you can see my ugly mug. If we get back to an interest rate of around about that sort of 2 to 3%, to make that saving of the cost, you're going to have a lot more in savings. But at the moment, if you're looking at, say, about a 5% interest rate or a 6% interest rate, depending on where we are in the cycle and everything like that, that 5% you're looking at around, on $8,000, you're looking at around about saving $400 a year. And if it's at around about that sort of 6%, and if it's higher, it's going to be a little bit more, obviously. You're looking at 6 8 48. So you're looking at around about $480 a year you're going to make as that savings. So the more you've got in there, the more you can actually get that headway away.
So I mean, that's your basic, that's your package variable usually. Now, a lot of banks, if you go down the path of a fixed rate, which we'll cover soon, they might have more competitive fixed rate offerings under their package because you're getting that annual fee. So in that case, they're prepared to give you a slightly lower rate on the fixed, but we'll sort of cover that in a minute. A basic variable is basically a no-frills line. So you will just have, say, a $500,000 loan, that's it. So anything extra you want to pay into that loan, you're more than welcome to. Any variable loan that I'm aware of, you can pay extra in, and then it has what's called redraw. So if your repayments are $500 a week and you pay $600 a week, each week there's $100 extra going into this column year. So at the end of the financial year, at the end of the year, theoretically, you might have an extra $5,200 sitting here in available balance, which is called redraw. And every bank these days, you can redraw that online with no fees. So usually the rates are lower because you're not paying for all the extra stuff. And if someone comes to me and says, look, I want the cheapest rate I can possibly get, Basic is excellent. It's actually a very, very good product. The redraw more or less works like an offset. And the only difference is you have more control over the money in an offset account because it's a separate account, whereas the bank potentially has control over some of that redraw. There was something that happened with a lender about a year and a half ago where they reduced people's available balances without telling them, which blew up in the media. It wasn't very good. But yeah, so that's, if you have your loan and you pay extra into it, you can build up available funds there, and that's almost like forced savings. And if you never touch it, you don't have to. You get to a point where you can pay it out, fantastic.
Now, in an earlier video, I have talked about package and redraw and offsets and that sort of thing. Just from a structural point of view and from an investment loan side of things, if you do go the basic option and you do put that extra money in there, $5,200 as redraw, that can cause a little bit of pollution to the loan, because you're potentially mixing owner-occupied debt with potentially investment debt, can cause your account a bit more of a headache, okay? But if you're not looking at growing a property portfolio and we're just happy having the one house and that's all you want, Basic is actually a really fantastic product to have a look at that, okay? If you are wanting to have, 2 or 3 houses down the track and everything like that, the package product and paying that cost of the package product to save you potentially money down the track in the long term might be worth that expense, even though it's going to be costing you $400 a year potentially, depending on which lender, et cetera, to do it. It may save you more down the road in tax, not so much as in reducing your tax bill, more reducing the cost of your accountant, because they have to work out less of what is deductible debt and what is non-deductible debt. Obviously, you need to have that conversation with your accountant at that point in time, but there is that little bit of a thing in there as well.
There are a lot of considerations to take hand on.
I've been Tim from IPS Buyers Agent, your local buyer's agent, and the mortgage broker from Moreton Bay Finance Broker, and this has been Ryan.
When Ryan, your licensed mortgage broker with Moreton Bay Finance Broker.
Thanks, guys. Until the next episode.